In case you guys don't know, BlackRock is the largest hedge fund in the entire world with a total assets under management of over $10 trillion, which is like 3 times the GDP of the entire United Kingdom. And just in stocks alone, they hold over $3 trillion worth of stocks, which is about the same GDP as the UK, which is just crazy to think about. So this is just a massive like behemoth of an investment management company that has their tentacles in just about everything in the world. And so I thought, why not take a look at their portfolio and their top 10 largest stocks that they hold in it here in 2023. And to make things even more fun, I'm actually going to rank these stocks from best to worst based on my own opinion of them. So I hope you guys enjoy this. A lot of stocks to run through, so we're going to rapid fire through them. I will just ask you to please hit the like button and subscribe to the channel if you do enjoy this, because it really means a lot to me and it helps keep this channel alive. So thank you for that support. But with all that said, let's go ahead and jump straight into this list. All right, and counting down here from smallest to largest in the portfolio, stock number 10 is actually going to be an ETF, and that is the iShares Core S&P 500 ETF, ticker symbol IVV, which BlackRock owns about $25 billion of at just a bit under 1% of the portfolio. And how crazy is that, guys? Most hedge funds don't even have that much money in total, but for BlackRock, it's only worth less than 1%. That's pretty crazy. Anyway, this one here is just an ETF really that tracks the broader S&P 500 index, so it's more of a way of just investing in the broader stock market in general rather than picking individual stocks. Having said that, it's a pretty safe bet overall with decent returns, up over 50% in the past 5 years. And as long as the world doesn't end and America continues to be a superpower, well, it's likely going to continue to perform well in the future too. The ETF is also well diversified with over 500 of the largest stocks across many different sectors, with the top 10 largest holdings making up over 25% of the ETF, including some of my personal favorites like Microsoft, Google, Amazon, and more. And it even pays a small dividend of about 1.6% with a tiny payout ratio, not payout ratio, expense ratio of just 0.03% to actually own and hold the ETF. That's how much it'll charge you to own that ETF. It's very, very little. Overall, it's a great ETF for beginners in the market, or really for anyone that doesn't have the time to research individual stocks. But for me, I've never been a big fan of these, as I just have way more fun picking individual stocks myself, and for that reason, I'm actually going to rank them at the bottom for now at number 10. Again though, not because it's a bad ETF, it's actually a great one, but I just have zero interest in owning it myself. Okay, one stock that I do actually own though is Nvidia, ticker symbol NVDA, coming in at number 9, which BlackRock owns over $26 billion of at just under 1% of the portfolio. And I personally love owning this one long term. Not only are they already recognized for making the best performing GPUs in the world, which has led to very impressive growth, especially during the pandemic, where sales and profits both more than doubled in size. But even looking out into the future, I really think the best is yet to come with their work in artificial intelligence, autonomous driving, smart cities, the metaverse, gaming, and a lot more. I won't repeat everything that I've been saying about Nvidia in recent videos, but just know that all of these areas require extreme computing power and revolutionary software that Nvidia has become a specialist in providing. And it's one of the many reasons why analysts continue to praise the stock, which is why it's gained close to 50% this year at a time when so many semiconductor stocks continue to struggle. Still, from the top, Nvidia is still down about 40% because of the lower growth coming out of the pandemic and the weaker macroeconomy, which is lowering demand for chips and computers, so their sales will need to cool down for a couple years before they're able to start growing a lot once again. I do think this will happen over time though, as these various markets grow and mature, and that's why their total addressable market is actually estimated to be 37 times larger than their current size. So purely as a long-term investment, I'm still going to rank this one very high at number 3 for now until I see what else is on this list. Okay, moving on to stock number 8 though, we have Berkshire Hathaway, ticker symbol BRKB, which BlackRock owns over $27 billion of at also just barely less than 1% of the entire portfolio. And this one makes total sense as it's the giant investing company and conglomerate of the great Warren Buffett. However, as great of a long-term investor as Warren Buffett is, Berkshire is not a company that I've ever been really too excited about owning myself, as most of their holdings are fairly boring, kind of slow moving value stocks, usually in the finance, oil and gas, and insurance markets, with a few exceptions like Apple and Coca-Cola. Don't get me wrong though, their holdings still provide some slow moving but very strong financials, like close to $300 billion in sales and $100 billion in profit just last year alone. And the same can be said about the stock, as it doesn't usually skyrocket like other growth stocks, but it still provides stable returns, like climbing about 50% over the past 5 years. However, the issue I have with it is that you have to pay a premium for that size and performance, as their PE ratio is over 100% more expensive than the sector. Personally, I think it's a fantastic choice for anyone looking for stability, and especially a giant hedge fund like BlackRock that can maximize their returns on it by investing a gigantic amount of money in it, and really knowing that it's probably going to be a safe place for them to park so much of their money in. But for a more kind of long-term growth-oriented investor like myself, I'm just not sure that I'll get the really big returns that I'm looking for by investing small amounts in a stock like this. So I'll put them right around the middle at number 5, since I think it's a solid choice for most investors, especially very wealthy ones, but not a very exciting one for me personally. All right, coming in at stock number 7, though, is going to be ExxonMobil, ticker symbol XOM, which BlackRock owns over $32 billion of, and this is the first stock on the list to break north of 1% of the portfolio. Now, I personally have found some of these oil and gas giants to be interesting stocks recently, as they've been benefiting heavily from the rise in oil prices around the world because of all the inflation as well as the conflict in Ukraine and Russia, which has boosted Exxon's financials by a gigantic amount, with revenue growth of 55% in 2021 and 45% in 2022, reaching a record-breaking free cash flow of about $60 billion over the past year, which they've been using to buy back stock at almost $5 billion per quarter and paying down their debt from over $60 billion in 2020 down to less than $12 billion today, which is very impressive. They're also using that money to continue paying an excellent dividend of over a 3% yield with over 4 decades of consecutive growth. The problem, however, is that the stock price has now surged to a record high and is more than 3 times higher than where it was at the start of the pandemic, leading to a valuation that is actually more expensive than the broader energy sector, which is not something that you would normally see in oil and gas companies, because everyone is really expecting the market to shift towards renewables over time, and thus it's usually pure play renewable energy stocks that trade for a premium, not the other way around. And while Exxon is at least trying to invest in renewables with a $15 billion plan to lower carbon emissions, as well as several new developments, including some large-scale hydrogen power plants for the future, I'm just not exactly sure what the future holds for this very volatile and cyclical company and market that they operate in. Now, the next 2 years, for example, are actually expected to be revenue declines for the company. So while I can understand others owning it, I just think right now it's trading like a pure play renewable energy stock of the future, which I'm not entirely sure that it deserves that premium. So I'll put it just behind Berkshire for now at number 6. Okay, moving on to stock number 6 on the list. That's going to be a stock here that I do actually own myself, and that I'm, to be honest with you, really in love with at the moment, and that is Google, or Alphabet, but I always just say Google, and ticker symbol is GOOG, which BlackRock owns over $35 billion of and is worth 1.2% of the portfolio, and this one is an absolute no-brainer. Google is insanely dominant in virtually all aspects of internet technology, with market leadership in so many areas, leading to gigantic financials on both the top and bottom line, doing a mind-blowing more than 250 billion in sales and close to 80 billion in profit just, last year alone. And I actually think they still have a ton of future potential too in all kinds of different technology related markets. But because of the post-pandemic crash in the tech sector, Google stock has actually lost close to a third of its entire value, leaving it trading almost 15% cheaper than the sector on a PEG ratio basis, which I think is absolutely insane. Google easily gets the number one spot on this list, and I actually think that it's the best overall deal in the entire market right now. I don't care what anyone says. From a long-term perspective, Google is the best all-around stock at today's prices when you factor in value, growth potential, risk, and reward. The only thing that they lack is a dividend. If a dividend is on your mind though, well, stock number 5 is actually a dividend king in the giant conglomerate Johnson & Johnson, ticker symbol J&J, which BlackRock owns over $35 billion of and is also worth about 1.2% of the portfolio. And I'm sure all of you know about J&J. They own tons of household brands and many healthcare and pharmaceutical products too, ranging from Band-Aid and Listerine to various lotions and powders and Tylenol and Benadryl and Motrin and a lot of other very popular, brands, pharmaceutical products, things like that. Anyway, financially, they do huge sales and profits, usually around 100 billion and 20 billion respectively on the top and bottom line, which had technically made them the largest pharmaceutical company in the entire world until Pfizer released the V-shot for the pepperoni, which instantly doubled the size of Pfizer and gave them the number one spot. Still, J&J is a giant behemoth that has been able to grow their dividend every single year for 6 decades in a row, currently yielding close to 3%. The stock price has also been suppressed a bit because of various lawsuits and scandals, leaving it only up about 20% in the past 5 years, and with a valuation that is actually cheaper than the sector despite their dominant size. The only issue I have with them though is that it's relatively slow moving with very little growth of only a couple percentage points of revenue in the next couple years expected, and the dividend yield of less than 3% is not really enough to make up for that in my opinion. So while I think that it's a safe stock to invest in, it's just not very exciting, similar to how I feel about Berkshire Hathaway actually. So I'll rank them about the same, but I'm going to put J&J just slightly ahead of Berkshire at number 4 because of the cheaper valuation and the dividend. By the way, ignore this next stock on the list because it's actually just a different version of Google stock. It just gives you ownership rights for this version. So in total, BlackRock actually owns over 70 billion of Google at around 2.5% of the portfolio. And I definitely agree with that as, again, like I told you, I think Google is the best stock in the market right now. Coming in at stock number 4 though, that'll be the giant healthcare company United Health Group, ticker symbol UNH, which BlackRock owns over $36 billion of at just a bit above 1.2% of the portfolio. And if you've never heard of them, they actually command the most health insurance market share in America, even ahead of other giants like Anthem, Kaiser Permanente, CVS, and more. This has led to giant financials on both the top and bottom line, doing over 300 billion in sales last year alone. Crazy amount. And surprisingly, it's still a lot of growth coming in for them at around a double-digit percentage this upcoming year. And this is largely due to our aging populations that require healthcare. In fact, by 2030, every baby boomer will be 65 years of age or older, leaving 1 out of every 5 US citizens at above retirement age. And guess what? They're going to need health insurance. And this is why, insurers like this are benefiting from this growth. And despite the stock shooting up to almost a record high, the valuation is actually still pretty good at a cheaper PEG ratio than the sector. That's because some of these insurers tend to trade a little cheaper because of the risk of federally funded Medicare for all, which is of course being heavily pushed by some politicians, and we don't really know exactly how some of these insurance companies would be affected if those other policies were to be implemented. Although we do know that most of these companies, including United Health, by the way, have always been advocating against it, so we can assume that it would likely hurt them. Overall though, It's a great stock if you can stomach that future uncertainty, and it even pays a small but high growth dividend as a little bonus. I personally don't invest in it because of the uncertainty, but I still prefer it than some of these other stocks that we've seen so far. So I'll actually put them in J&J's spot at number 4 and bump the rest back one spot back to fit this one in there. Okay, guys, we are now breaking into the top 3 final stocks. And coming in at stock number 3 is going to be the e-commerce and cloud computing giant Amazon, ticker symbol AMZN, which BlackRock owns over $65 billion of and is worth over 2.2% of the portfolio. Now, you guys know that I own and really love this stock myself too, as they are the market leader in not just e-commerce, but they also dominate the hugely important cloud computing market, as well as heavily competing in a number of other really important markets like digital advertising, electric vehicles, video streaming, music streaming, and a lot more. All of which they continue to invest heavier amounts of money in over time as they continue to bring in giant financials year after year, already doing over $500 billion in sales and still managing to grow by around a double-digit percentage every year. Now, valuation, and that's super impressive, by the way. Now, valuation wise, Amazon has never really been a cheap stock based on profits, which you can see on this chart here comparing their PEG ratio to some other tech giants. But even at 2.4, I actually think that's not crazy expensive. And even if it is, I don't even judge Amazon really based on their profits because they always reinvest that back into the business. Instead, if you look at a price to sales ratio, they're actually significantly cheaper than most, even Google, at a PS of only 1.9. And part of the reason for that is because the stock itself has actually crashed by almost half its entire value coming off of the pandemic. And so right now, I actually think that this is a great time to be loading up on Amazon shares for the long term. And because of that, I'm going to give them the number 2 ranking, only behind Google. Okay, moving on to stock number 2 though, we actually have my personal largest stock in my entire portfolio, and that is the almighty Microsoft, ticker symbol MSFT, which is the first stock on the list that BlackRock owns over $100 billion of, at $127 billion to be precise, and is worth over 4% of the portfolio. And like Google and Amazon, this is another no-brainer here, as they are incredibly large and dominant and really one of the most profitable and well-run companies in the entire world, doing about $200 billion in sales, $80 billion in profits, with solid growth every year, and already a dominant business across PCs, office productivity software, gaming, virtual meetings, cloud computing, and still a very bright future even with all of that in various other areas too, especially artificial intelligence, where their investments into OpenAI are really paying off as they now implement AI into the various other parts of their business too, which is something to look out for, guys. Don't sleep on Microsoft and what they're doing with AI. This year, however, will be lower growth coming off of the pandemic because of the weaker demand in PCs and various different things going on in tech. But next year, sales are expected to rise by a double-digit percent once again. And in the meantime, the stock has already lost over a quarter of its value in what is the largest crash that I've really seen in the stock. The only reason why I'm not buying this one as much as Google and Amazon is because their valuation is a little more expensive with a PEG ratio of 2.5, which is the highest among these big tech giants on this chart here. But it's still the best long-term investment on the list, just right after Google and Amazon. So I'm going to rank them at number 3. I absolutely love it. And I'm going to move NVIDIA and the other stocks back one spot so I can fit it in. All right, guys, that finally brings us down to the number 1 largest stock in the portfolio of BlackRock, and that's going to be the iPhone giant Apple, ticker symbol AAPL, which they own a massive more than $140 billion of at over 1 billion individual shares and worth close to 5% of the portfolio. Now, I do actually own some of this stock too, but by a much smaller amount than some of the others. However, they are also just a fantastic choice, I would say, for most investors, as they do crazy financials of around $400 billion in sales and 100 billion in profits. They are insanely profitable, guys. And that's because their business is one of the stickiest out there, where they have already reached over 2 billion active devices being used around the world, which they continuously sell more and more services to over time. And that services part of their business is not only where they're able to still generate a lot more growth, but it's also really high margin, hence why they're so profitable on top of the already premium prices that they charge for their devices, which, by the way, are usually made in China. So they make these devices really cheap costs in China, sell them at really high prices, and then they sell you more services on top of that. It's a business model that they benefit, heavily from. Now, the only reason why I don't buy a lot of Apple stock myself, though, is because they tend to be very cyclical, with actually slightly negative growth expected this year. And because the stock is trading near an all-time high and only down about 17% from the top, the valuation is also significantly more expensive than the sector. Still, like I said, it's a fantastic stock for most people with a giant business, over $135 billion in current assets that they can use to invest in new markets for the future, gigantic stock buybacks at over $500 billion spent over the past decade alone, and even a tiny but high growth dividend as a little added bonus as well. I love the stock. I kind of feel like it's tied with Nvidia, but I'll put them just barely ahead of Nvidia because of how massively large they are. So that's going to give us our final rankings here. And I went ahead, I put Google at number 1, I put Amazon at number 2, Microsoft at number 3, and those top 3, whew, man, I love those stocks. Apple at number 4, great stock. Nvidia at number 5, also fantastic stock. And then we get into the other ones. United Health at number 6, good, but I don't own it. Johnson & Johnson at number 7, Berkshire Hathaway at number 8, solid picks there for most people. ExxonMobil at number 9, that's a little riskier in my opinion. And then the iShares ETF at number 10, good ETF, but I'm just not personally interested in ETFs. So what do you guys think? Do you agree with my rankings? Would you make any changes to it? Let me know down below. Let me know if you own any of these stocks yourselves. And also let me know if there are any other portfolios that you'd like me to take a look at in the future as well. I'd love to make those videos for you. But thanks again for stopping by. Thank you for all the support. It means a lot to me. I will catch you guys in the next video. Take care, my friends. Bye-bye.